Welcome back. Today we're going to be talking about insurance, all different types of insurance, how it works, um, how to pay for it, how to use it. And again, as always, if you have any questions, let me know. So, the idea of insurance is that the world is risky. And there's a lot of things that you have no control over that could destroy your wealth and your assets. So, like if you own a car, someone could hit your car completely their fault, right? And that would cost you a lot of money. Your house could get destroyed. Um, you could get sick, right? There's a lot of risky things that could happen that are completely not your fault, but you would end up having to pay for. So the idea of insurance is to protect against that risk. Could I pay a company a little bit of money every month or whatever so that when something bad happens, they step in and cover that cost for me? Instead of me having to pay for the whole cost, they would cover it. And that's what insurance basically is. You pay a little bit each month. We call this a premium. And then when something bad happens, the insurance company is going to come in and financially fix the problem for you. Pay for the repairs to your car, or pay to replace it, or pay for your medical bills, whatever it happens to be. So, we're going to talk about some of the different types of insurance. Car insurance is probably the first one you're really going to encounter. Um, And when deciding how much do they charge you every month, well, that depends on how risky you are. Right? They're a company; they want to make money, so they're not just going to insure everybody for a cheap price. Right? They need to be able to make a profit. And if you're really risky, well, they don't really want to insure you unless you're paying a lot. So for like car insurance, unfortunately, young men tend to be the riskiest drivers. They tend to get in accidents more. They also tend to get in very costly accidents, high speed collisions that have a very high price to repair them. So a young man to insure on a car is very expensive, where like older man, older woman, not as big of a deal. So they'll look at you and decide how risky you are and then set your premium. Obviously, a higher premium means you're paying more, but then if you get into an accident, it should be covered. But when it comes time to actually call on the insurance company to help you, they don't just swoop in and pay the whole bill. You have to pay a little bit of it called a deductible. So before the insurance company will get involved, you have to pay a little bit first. Sometimes it's called a copay when it comes to a medical bill. Why do you think they do this? Why would an insurance company that you've been paying a premium to for a decade, you get into an accident, why would they demand you pay the first deductible? Usually for like a car, this is like $500. You have to pay the first $500. Well, the reason why they do this is they don't want you running to the insurance company over every little thing. Like you get a little dent. Well, maybe they don't need the insurance. You don't need the insurance. So it makes you feel like you share some of the risk still, that you still want to do the best to protect your car because you still financially lose something when damage happens. All right? If you were no longer held accountable, no, I just break my car and then go get a new one. Crash my car, get a new one because someone else is paying for it. If I have to pay the first deductible, the first $500, well, I'm not going to be so eager to do that. So you can kind of decide your deductible, but it's balanced off by your premium. So the lower your deductible, the higher your monthly payment, the premium. If you want a higher deductible, you'll get a lower premium. Those things sort of balance out, kind of what you want to do. Most cars, you're going to have to pay whatever premium, and then it's going to be probably like a $500 deductible, meaning if you get into an accident and you want the insurance to fix your car, you're going to have to pay the first $500. Then they'll pay however much they think your car is worth to fix it. So there's different types of insurance. There's health insurance. This one is required by law. You're all going to have health insurance. You're probably under your parents' or family's health insurance right now. You can do that until you're 25, but then you're going to have to get your own health insurance. This tends to happen through your company that you work for. If not, there are private health insurance or there's like government insurance you can look into. This one's very complicated, very confusing. You have to go to certain doctors that are approved within your health insurance. You usually have to pay a copay every time you go for certain things, and you have like a yearly deductible. So if you spend over $5,000 on your health in a year, then you've reached that deductible. The health insurance will cover most of the rest. It's very confusing, but it's required by law, and I would recommend you look at it through whatever company you get hired by. Usually offers some form of health insurance. Car insurance is probably going to be the first one you're going to have to deal with on your own. It is also required. If you have a car, you're legally required to have car insurance. Um, and that way you cover your car, but also if you cause damage to other cars too. If you get an apartment, you might need to get renter's insurance, which insures all the your personal property within the apartment. A lot of apartment complexes do this because if, say, there's water damage or the apartment burns down, you don't go after them, you go to your insurance company to fix things. Homeowners insurance, if you buy a home in the future, you're going to need to insure your home. Um, this tends to be very expensive, but your house is the biggest part of your assets. It's the most important thing in when it comes to your wealth. You want that protected. And there's life insurance. This one's optional. If you die, benefits go to whoever you choose. Um, Sometimes life insurance is offered through companies, in which case it's a good thing to do because it's a raise. You don't get the money. Your kids or whoever you decide gets it after you die. Sometimes you'll need to, if you're driving a car, you'll need to carry the proof of insurance. This is a card. Put it in one in your wallet or whatever, and then one in your car. That way you have it with you in case there's an accident or something happens. Talks about your coverage. On the back it says what to do and who to call. This is required. You are legally required to have this on you whenever you're driving, just like your license and registration. All right, today you're going to get a chance to research different types of insurance, look at what they cover, on average how much do they cost, and determine how important it is for you to have.